Picture this. A whopping 80% of Americans are in debt. That's right, 4 out of every 5 people you pass on the street are likely carrying some form of financial obligation. Now let's take a moment to understand what debt is. In simplest terms, debt is money borrowed by one party from another. It's a global phenomenon, a fundamental component of our economy. It exists because not everyone has the immediate resources to meet their goals. Whether it's buying a house, starting a business, or getting an education, this statistic might seem shocking, maybe even a bit scary. You might be thinking debt is bad, right? It's something to be avoided at all costs. Well, not necessarily. That's where this journey begins. We're here to talk about a different perspective, but what if we told you debt isn't always a bad thing? What if you could harness it for financial gain? Ever heard of the saying, "It takes money to make money"? That's where debt comes in. Debt, when used wisely, can act as a powerful lever to amplify your financial potential. Consider it as a tool, not a burden. Let's take a simple example to illustrate this. Real estate. Imagine you want to buy a property to rent out. The property costs $200,000. You could wait until you've saved that amount, which might take years. Or you could take a loan, buy the property now, and rent it out. The rent you receive can cover your loan repayments, and might even leave you with a little extra each month. What's happening here? You're using other people's money to generate income. You're using debt as a lever to increase your wealth. That's the power of debt as leverage. So, with the right planning, debt can become an investment tool. Now let's talk about consolidating your debts. Debt consolidation is like a financial magic trick. Imagine for a moment that you're juggling several balls in the air, each one representing a separate debt. It's exhausting, isn't it? Now what if you could combine all those balls into one manageable sphere? That's the essence of debt consolidation. It's about taking multiple debts, perhaps a car loan, a student loan, and a few credit card balances, and merging them into a single debt with one monthly payment. Let's consider Jane's story. Jane had 5 different debts, each with varying interest rates. She consolidated these debts, resulting in a single, lower interest rate. This not only simplified her payments, but also saved her a significant amount of money over time. Debt consolidation is not a one-size-fits-all solution, but for many, it's a powerful tool that can make your debts more manageable and save you money in the long run. Investing in yourself can be the best investment, and sometimes, that requires taking on debt. Imagine a young individual, eager to climb the corporate ladder but lacking the necessary skills. They decide to take out student loans to pursue a degree in a high-demand field. It seems daunting at first, the thought of being in debt for years. But consider the potential return on this investment. Fast forward a few years. They now hold a job that not only covers their living expenses but also comfortably handles their loan repayments. The degree has opened doors to opportunities that were once beyond reach. The debt, initially seen as a burden, has transformed into an asset, a tool that facilitated their growth. This isn't just a hypothetical scenario, it happens every day. People use debt to invest in their education and in turn, better their lives. With the right education, debt can become a stepping stone to a brighter future. Dream of starting a business? Debt can help make that dream a reality. Sounds counterintuitive, doesn't it? But let's break it down. Say you have a fantastic business idea, but lack the capital to kickstart it. Here's where debt, in the form of a business loan, steps in. Take the example of the successful tech startup, Tech Titans. They started with a substantial loan, used it to develop their innovative software, and today they're a household name. The loan wasn't a burden, but a catalyst that propelled their growth. Debt, when used wisely, can help you invest in your business and scale it up. It can help you hire skilled employees, invest in marketing, and buy the equipment you need. It's all about leveraging debt to generate higher returns. Remember, it's not about getting into debt recklessly, it's about strategic borrowing. So, debt can be the fuel that drives your entrepreneurial journey. Did you know debt can help you save on taxes? It may sound surprising, but certain types of debt can actually be tax deductible. Let's break it down. Imagine you're a homeowner. You've just bought a house and you're paying off your mortgage. Now here's the twist. The interest you're paying on that mortgage can be deducted from your taxable income. That's right. This is one of the ways debt can work in your favor. Here's how it works. When you pay mortgage interest, the amount you pay can be deducted because credit bureaus take note of such responsible behavior. They see it as evidence that you're less of a risk, which can lead to better loan terms and lower interest rates in the future. So you see, managing debt isn't just about staying out of trouble. It's also about building a strong financial reputation. So debt can be a vehicle to better credit and financial opportunities. Finally, debt can be a springboard for wealth accumulation. It might sound counterintuitive, but when used wisely, debt can be a powerful tool for building wealth. Let's consider a case study. Imagine someone who took out a loan to invest in the stock market or real estate. They didn't have the cash on hand to make the investment, but they knew the potential for return was high. So they leveraged debt to their advantage. Over time, the returns on their investment surpassed the interest they were paying on the loan. This is how using debt as a financial instrument can increase your wealth. But remember, this strategy requires careful planning, risk assessment, and continual monitoring. It's not a gamble, it's a calculated move. You need to understand the market, the risk, and the potential return before diving in. So, with the right strategy, debt can lead to wealth accumulation. This is the power of understanding and harnessing debt, rather than fearing it. So as you can see, debt isn't always a financial death sentence. Quite the contrary, it packs a punch with a power that can propel you towards financial prosperity, if harnessed correctly. Let's recap the different ways we've explored to use debt for financial gain. We've seen how it can serve as leverage, allowing you to make larger investments than you could otherwise. We've examined how consolidating your debt can simplify your financial life and potentially reduce your interest burden. We've discussed the enormous potential of investing in your education and your business through debt. We've looked at the tax advantages debt can offer and how it can help build your credit. And of course, we've delved into how debt can be a tool for wealth accumulation. So the next time you think of debt, remember, it's not always a villain. It can be a powerful ally. When managed wisely, the power of debt can be your secret weapon for financial success. Now we'd love to hear from you. It's one thing to learn about the potential advantages of debt, but it's another to put these concepts into practice. We all know that the world of finance is not one size fits all. What might be a brilliant strategy for one person could be a disaster for another. Have you ever taken a risk and utilized debt as a tool for financial growth? Maybe you've consolidated your debts, or perhaps you've capitalized on the potential tax benefits. Whether it's using debt for education, launching a business, or building your credit, we're curious to know how you've navigated the choppy waters of debt to reach your financial goals. Remember, your experiences could provide invaluable insight for others in our community. We're all here to learn and grow together, so don't be shy about sharing your story. After all, the wisdom of the crowd often surpasses that of the individual. So tell us, how have you used debt to your advantage?